Imagine buying your dream home, only to discover no one is willing to insure it, not because of your credit, not because of your income, but because of where it's located. Right now, in parts of Florida, homeowners are facing a growing crisis. Insurance companies are pulling out, premiums are skyrocketing, and entire neighborhoods are becoming uninsurable. This isn't just a housing problem, it's a financial crisis in slow motion. And if it spreads, it could reshape the entire U.S. housing market. To understand what's happening, we need to look at how homeownership really works. When you buy a home, you're not just buying property. You're entering a financial system built on risk protection. Banks require insurance before issuing mortgages. Because without insurance, the entire system becomes unstable. If a hurricane destroys a home and there's no insurance, the homeowner loses everything, and the bank may never recover its loan. That's why insurance isn't optional, it's essential. For decades, this system worked. Insurance companies assessed risks, set premiums, and absorbed losses. But in Florida, that system is now under extreme pressure. Florida has always faced natural risks, hurricanes, flooding, and rising sea levels. But in recent years, those risks have intensified. Stronger storms, more frequent disasters, higher repair costs. Each major hurricane brings billions of dollars in damage, and insurance companies are the ones paying those bills. Over time, losses began to pile up. Some companies simply couldn't keep up. Others decided the risk was no longer worth it. So they left. Major insurers reduced coverage or exited the Florida market entirely. This created a dangerous imbalance. Fewer companies, but more risk, which means higher prices for everyone. In some areas, insurance premiums have doubled or even tripled. For many homeowners, the cost of insurance now rivals their mortgage, and for some, it's even higher. But natural disasters aren't the only reason. There's another factor many people don't talk about: legal battles. Florida has seen a surge in insurance-related lawsuits. Contractors, lawyers, and claims disputes have driven up costs dramatically. In some cases, small claims turn into massive legal expenses. Insurance companies argue that these legal costs are unsustainable. And whether you agree or not, the result is the same: higher premiums. And fewer insurers are willing to stay. So what happens when insurance companies leave? The state steps in. Florida created a state-backed insurer called Citizens Property Insurance Corporation. It's meant to be a last resort, a safety net for homeowners who can't find private insurance. But here's the problem: that safety net is getting bigger and weaker. As more people rely on it, the financial risk increases. If a major hurricane hits, the system could face enormous pressure. Some experts warn that this could lead to higher costs for taxpayers, or even broader financial consequences. At first glance, this might seem like a local issue, but it's not. Florida is one of the largest housing markets in the United States. If homes become difficult to insure, they also become difficult to finance, which means fewer buyers, falling demand, and potentially declining property values. Now imagine this spreading to other regions: coastal cities, flood-prone areas, wildfire zones. If insurance becomes unavailable in high-risk areas, entire housing markets could be affected. This is no longer just about Florida. It's about the future of real estate in a changing climate. The Florida insurance crisis is not a single event. It's a warning sign, a glimpse into what happens when risk outpaces the system designed to manage it. Insurance is the invisible foundation of homeownership, and when that foundation cracks, everything built on top of it becomes uncertain. The question now is, can the system adapt? Or are we witnessing the beginning of a much larger shift in how and where we live?